morning. Thank you, everybody, for taking the time to come and hear the story of Cardinal Resources. We think we have a very exciting story to tell. It's been a remarkable 4 or 5 years for this company. Cardinal is both listed on the TSX and the ASX. Its market cap is about $140 million currently. We have a project in northern Ghana. The project is called Namdini. Namdini was initially discovered in around 2014. That's our current capital structure. Hold on there a second, please. You can see that currently it's actually about 140 at the moment. You can see the analyst coverage at the bottom. There's 4 or 5 brokers that cover this company here in Canada. Our shareholders we have a very institutionalized book of shareholders. We have Goldfields owns 11% of the company. And to note, Goldfields bought that in the market. It was not at our invitation. They showed up. They wanted to own the company. We have done a couple of small fundraisings since they took their shareholder position. And they have, each time we've done a fundraising, we've offered them as gentlemen their pro rata, and they've taken it each time. So they also own some of these listed options, and that would therefore take their position on a basic dilution at about 19.9%. Having said that, we've only had a couple of conversations ever with Goldfields. We don't know what their intentions are. We don't believe there's any intentions in the near term. And you can see that we have a very good institutional shareholder base. About 80% of the stock between Goldfields and institutions is fairly tightly held. Board and management. Archie Comsitas is the CEO. He would normally be here, but he is not today, and I'm doing this in his place. He was the driving force behind this company. He was the one that made the initial discovery. He's Australian. He lives in Ghana. He lives at the project effectively, and so very hands-on. Malik Esha was his partner. He's a local Ghanaian. So they were the 2 initial founders of this company. Kevin Tomlinson is the chair. He's a structural geologist. He's a Canadian. And we have recently added 2 important new board members, Dr. Ken Thomas and Trevor Schultz. These are both mine builders with very relevant experience. Trevor, in particular, was responsible for the build and the startup and the operations for 4 or 5 years at the Sukari mine in Egypt of Centamin, which will have a flow sheet that's very similar to this. So he has very relevant experience, and that was a huge success with very few hiccups. And 500,000 ounces a year production approximately is what Sukari now pumps out. So these 2 guys are on because we are moving now from a pre-feasibility study to the feasibility study, and we need their kind of engineering expertise. Next slide. From a geological point of view, we are in northern Ghana. Most of the action in Ghana has been in the south, and there was always a belief that there would not be anything found in northern Ghana, which never really made a lot of sense given what's going on in Burkina Faso. But in any case, the Volta River embayment really was considered to have been cover for the greenstone belt, and therefore, by the time you got out from underneath the cover in the northern end of the country, it would be too deep to be looking at. That turned out not to be the case. If you stand on the southern end of that embayment, you are standing, or the northern end of that embayment, you are standing on the southern end of Namdini. It begins right there at that point. So this is a typical, it's Birimian greenstone, although it has some unusual characteristics for Birimian greenstone belt. We are 50 kilometers south of the border with Burkina Faso, and we have many advantages from a logistical point of view. So, hold on there. You can see us right there. Everything comes up this road from Accra. Everything going into Burkina Faso comes up this road. It's a paved road. It's only about 25 kilometers from the site. The town of Bolotanga is about 25 kilometers from the site. The White Volga River is 7 kilometers from the site. And the national power grid is about 30 kilometers away, where we have now secured power at 15 cents a kilowatt hour to power the facility. So we can move out. In September of this year, we put out, or September of 2018, we put out our maiden ore reserve around our pre-feasibility study. You can see some of the consultants that worked on the study. We think it came in with some robust numbers. So at the moment, we had a 7 million ounce global resource. That's now down to 4.76 million mineable ore reserves, subject to the pre-feasibility, some basic economics. You can see some of the numbers here. We're going to go to 9.5 million ton per day facility is what is being contemplated. We've used 1250 for the financial model. Pit design was done at 1100. You can see you can see the capital is 400 million. We do have a starter pit we'll talk about in a bit. The payback on this project is 1.8 years. And you can see very healthy NPV and IRRs for this project based on 1250 gold. Hold on there. So we have, we're lucky that we have 1 million ounces in the starter pit at surface. It runs at a grade of 1.3 grams. So it'll be the first 2.5 years of production. It will pay back all the capital within 1.8 years. So it has a very quick payback. And then you can see life of mine will be about a 300,000 ounce per year producer for 14 years at a AISC of 786, I think is the number. We're using recovery. The recovery is a little bit better in the starter pit than in the life of mine. It's at 8.4. Once we get the thing up and running, we'll be tweaking it, and we think we can probably eke out a few percent as we get up in real life, in a real-time scenario. Strip ratios are very low. Starter pit is 0.5, and life of mine is 1.4. So just again to keep in mind, this pit will be 1.1 kilometers long, 350 meters wide, and 400 meters deep, and that is where the resource resides today. So that is it there, the maiden ore reserve. So it's at a 0.5 cutoff. It's 130 million tons, 1.14 for 4,760,000 ounces at about an 84% recovery rate. You can see some of the financial sensitivities. We use 1250 gold, so you can see 38% IRR. Same as for the NPV at a 5% discount rate. You got $586 million US. Please. There's the Namdini license. It's 20 square kilometers. We actually own 900 square kilometers of, we think, the best exploration ground in northern Ghana. So we got lots to do, and that's important because as we get into the build-out of this project, we get into the so-called, Lassonde curve and so on and so forth, we will have a very busy regional exploration program going on. So there'll be lots happening as Namdini is being built. I think we've sort of covered most of this stuff here. We have our mining license. The environmental permit will be coming along, we think, roughly this summer to dovetail with the bankable feasibility study. Here we are at the pit design. So again, the pit design was 1105 gold. You can see the starter pit at the top there with the low strip ratio. This structure, you see as we get to a cross section, is plunging at depth to the west. We haven't looked really, we've drilled down to about 600 meters. We know it's there. We know it's improving at grade as well. But for our purposes, for the time being, we're going to focus on what we have today that's open pitable. There you can see the plunge there. This is a robust project. And let's move along to the flow sheet. So this is a flow sheet. We're going to make a concentrate. This is a very large, highly disseminated sulfide deposit. All the gold reports to the pyrite, and it's not refractory in any way. So we were going to have it's a crush grind float, then into the CIL, and we will be pouring gold at site. Because of the low mass pull, we have a relatively low capex. The capital cost is $400 million here. We're really handling at the back end only about 1 million tons per annum, and the concentrate goes up to 15, 17 grams of gold per ton. So 10% reports to the gravity, as you can see. So it's a relatively simple, relatively straightforward, and very similar to what Sukari has in Egypt, which is the mine that Trevor Schultz was responsible for building and putting into production, and I would say with very, very few hiccups, in a tough place. Carry on, please. As I said, we do have district exploration that we have. We have 900 square kilometers of some of the most, that's what the terrain looks like. If it's basically open savanna. There's very little there. There's some grazing. There's very little artisanal workings. There have historically been, but there's very few people. It's flat as a pancake, basically. So it's relatively easy working environment. So we have 900 square kilometers of what we think is some of the best ground in this area. You don't find 7 million ounces and then nobody else shows up. So we expect to have company before very long. At the moment, our exploration is going to be focused primarily on proximal exploration to the mine site itself. We think we have an opportunity to possibly find, 400,000 ounces. That's relatively within trucking distance of the mill facility. That we are hopeful we may get, find something, 1.5 to 2 grams per ton would make a significant difference, and we'd obviously do that. So we're focused in the short run on that proximal exploration to the mine site, and we hope to have something to say about that before too long. The other ground we'll get to, but it's a lot of ground to look at, and we've got other priorities in the short run. The timeline for Namdini, as I said, we put up our pre-feasibility in September. We'll have our bankable feasibility this summer, we believe. It's really about 70% done. It's the detailed engineering on the plant that's really what we're focused on at the moment. And at which time we will make a decision to, we're already talking on the financing side. We've got banks that are interested, and of course they're waiting for the bankable feasibility study, but we're confident that we are going to have backers for this project. It's a big project. It's got scale to it. It will support a big mine for quite some time, and we're hopeful that we actually get the chance to build it. Thank you very much.